Good morning, everyone. This is Daily Trading Analysis with the weekly recap, in which we are going to cover the fundamental news of the week, also checking the earnings, checking the sector's performance, open interest, and also performing technical analysis from top to bottom from the monthly that we just ended, going through the weekly and the daily, and also Friday's analysis, coupled with open interest in both equities, Nasdaq and S&Ps, because we are finding that buyers are again coming in. So stay with me and follow me through this journey of this long video, but very interesting, because we are going to uncover some of the details and nuances underneath the price action that we must see in order to prepare for next week. So first, on Monday, it was just no news Monday, but Dallas Fed Manufacturing Index is still in the negative. So that's a cool down of the manufacturing that it's always welcome. On Tuesday, we started seeing the issues about this week. Employment costs went to the ceiling, skyrocketed. Benefits, wages, and cost all outpaced previous readings. And that was a concert and certainly a miss that really affected the market, because it started Wednesday, and also on Wednesday we saw a big sell-off. On the Chicago PMI front, look that we are also slowing down with a reading of 37.9 from 41. We were expecting a big uptick on the performance of the manufacturing index. Consumer confidence also taking a big hit. So from 103, we were expecting bigger consumer confidence, because if something is true, is that the consumer spending, the consumer confidence, it's pretty key for our situation, because it stabilized the economy against the inflation. That's the key to understand. On Wednesday, everyone was watching a couple of pretty interesting data, starting with the employment change. We were expecting a big decrease on payrolls on the private sector, coming from 208,000. We got less than expected, 192. So this is also a miss. A big hot reading on payrolls on the private sector is certainly a miss. But the big ones, ISM manufacturing PMI, coming in the contractory territory. Remember that everything below 50, it's contractionary, and above 50, it's inflationary. So we were expecting just to be flat at 50, but we got quite a big hit at 49.2. So what happens when we have inflationary pressures on wages, benefits, and cost, and we have PMIs of lower than 50? So a stagflation, and that's the big concern in Wall Street. Jobs openings was certainly lower than expected, from 8.8 to 8.6. We were at 8.5. Certainly two big misses. And the big announce was the FOMC rate decisions. No surprises on the front, on the 5.5, so we remain steady. But the press conference gave us a lot of dovish comments from Jerome Powell. If you want to see the deep analysis, I uploaded a video on Thursday reviewing all the statements, the key sentences that Jerome Powell said during the press conference. I am going to link that in the app right corner. So if you are interested, just go ahead and check that video. Certainly what we are seeing in the interest rate decisions is that we are now still at the holding rate until September. September with 50-50, basically, with 48% probability we are going to cut rates the first time. And the second time, now we are going to talk about later with the fundamentals, it's priced in December. So 2 rate cuts for 50 basis points. That's pretty interesting. Why? Because until Wednesday, everything went south. And on Wednesday, with the Jerome Powell press conference, on Thursday, with the non-farm productivity quarter over quarter, it skyrocketed the costs and lowered the productivity. This was also a miss. And also, look at this, initial jobless claims came flat. We were expecting an increase, also a miss on the jobless claims. So why the market were starting to rise? That's because of earnings. I'm going to review the earnings real quick. Amazon profit skyrocket, more than triple estimates. Look at these numbers. EPS 98 versus 83, revenue 143 billion versus 142. Amazon Web Services really pushing higher with a 200% on the operating income. And basically, sales at AWS accelerating 17%. And also advertising, now that Prime Video, it's also including ads, still, well, providing a little bit of revenue, but the operating income, it's way beyond expectations. And that was certainly a big hit that affected price action on Wednesdays and Thursdays. On Thursday, we started going higher on earnings, and the big numbers were on Friday, with Apple releasing largest ever 110 billion share buyback. Even though iPhone sales dropped 10%, we were expecting 46, we got 45.9. Also a miss on iPad revenue, 4.9 versus 4.6. And also on services and other products revenue, 7.9 versus 8 million. So the earnings were not stellar, still beating on EPS and revenue. That's a good check. But obviously, when you are buying your own shares at this amount, 110 billion, it's crazy. So Apple pushed the market higher. Amazon pushed the market higher, really buoying the sentiment on earnings. And Fridays were the last cherry on top. Look at these numbers on NFPs, non-farm payrolls, and unemployment rate. Non-farm payrolls, 174, big decrease. We were expecting from the 300,000 of the previous reading to 243. That was certainly good, but look at this number. This number is that payrolls are decreasing by a lot. This is a big hit. And also unemployment coming from 3.8 to 3.9. We were not expecting this. We were expecting flat reading on the unemployment. So both readings were pretty good. The participation rate is still there, and average hourly earnings is basically decreasing also on the year-over-year and also decreasing on the month-over-month. So 3 big hits on the front, plus earnings with Amazon and Apple pushing the market, made the Friday a really crazy day, pushing more than 300 points. ISM services PMI going below 50, it's also crazy. Services was the sticky part of inflation, and coming from 51 to expected 52, getting a 49, it's pretty crazy. So we ended the week in a very high note. And we review the earnings, we review the open interest, the interest rate decision, we review the probabilities, and we are certainly going to see that on the charts right now, because when we see the monthly, this is the monthly chart on the Nasdaq, we can certainly see how we ended up April down 4.89, but we are starting May with a pretty big interesting situation. So certain levels that held are this zone right here at 17,600. The second zone that we were waiting for, it's this zone. So at this area, we were expecting bulls to recommit on the monthly. And as you can see, we are holding key areas that for me, it's pretty damn bullish. On the weekly, we certainly had a pretty bad week 2 weeks ago with a 5.50% retracement at this due to bad earnings. But then the last week, it was pretty damn good. And this week, look at this week, look at these buyers down here. So still coming up from this zone, we were, as I was saying, waiting for this zone also. So all these, it's support. So we are now entering in a new zone, most probably a higher low on both weeklies. And the daily was pretty damn choppy. This was the sell-off that everyone was saying, oh, it's starting the bear market. No, because earnings were about to release. And we have to wait for that data, because then you can really appreciate how the week performed. So we have Monday. This was the entire week. We have Monday, no news. And then Tuesday and Wednesday on really bad expectations and really bad numbers on the fundamental. But then look at this. Thursday and Friday reverted completely the situation. So where are we in terms of the dailies? So we are in the middle of a lot of key areas. Let me just explain all you are seeing right now, because let me just preface this with, this is the fair value gap, the inverted on the daily, in which we are right now. And pretty interesting areas in terms of volume. If we anchored to all-time highs, this is all-time highs right here. If we anchored a volume profile from here to this down here, we can see that the volume has pretty distinct areas and a big void in the middle. Where are we? Just at this void. So we went, look at the low volume of this area through the sell-off. So this area is basically out of volume area low that you can see down here at the red area. So everything below down here was oversold. And look at the volume. The volume was pretty low. So if we check where are we right now, we are in a zone of low volume. So we are either going here or here. We are coming from here. So the next big volume node, it's up here at 18,300. That's certainly my main area for target next week. Why? Because right now, as I was saying, we are in the middle of the fair value gap inverse here. But if we anchor a volume VWAP at the all-time highs, look at this orange line. We are just there. So in terms of VWAP, we are there. In terms of volume, we are in a void in which market should go straight to rebalance that area. The only thing concerning is that in this inverse fair value gap, that it's still there. We are super bullish coming through a low volume area through a big volume node, but we have also the big retracement from the Fibonacci from the all-time highs to the low of this range. We have the golden pocket right here. So in terms of targets, let's focus a little bit more. So the main concerning part for me is this inverse fair value gap. This is a daily one. And if we continue seeing momentum, or at least a retest from this zone, so 18,000 is certainly a big number that we must hold. And if we start bouncing from that area, creeping higher and going through the inverse, I certainly have this golden pocket at the first target, 18,150. And then this zone of the big volume node that is also value area high from the all-time highs to the low of this range. So certainly pretty interesting area, but we have to be patient. We have to be patient because the move was below this zone. This was an oversold territory with pretty low participation. So below volume area low was a big accumulation. Look at all these weeks, look at all these highs on the lows and the big momentum higher. we can still reject, don't get me wrong, we can still make use of this fair value gap inverse on the daily and reject 8,000 and continue lower. But after the Good Friday with fundamentals and also the good earnings, I lean towards more to the bullish side because I think this is what we are going to see. The target, the bounce, and the void. So this is my plan for next week. And before moving ahead with other markets and also individual tech performance, let me just go through the open interest because I always review this looking for big increase in open interest in an up days. And that's what we are seeing. We are seeing 18,000 on the ES on an up move on Friday. That's certainly good because this looks like new business, new buyers. And on the Nasdaq, we are seeing also the same. Almost 2,000 on a big move higher with Apple earnings, Amazon earnings, good fundamentals, certainly new business, new buyers. So that coupled with the fact that look at this is the 5-day performance on the sector funds. Utilities are still outperforming every market, but technology and consumer discretionary are up here. Energy, inflationary pressure is decreasing, -3% on this week. And if we open our eyes to the 10-day performance, technology, consumer discretionary are more than 5%. Up here, energy still down there. Where are the defensives? Down here, staples, healthcare. So in terms of sector performance, we are seeing an increase in volume, an increase in open interest, and also a couple of areas of interesting price action and support on the daily and higher time frames. Now that we did what we did on the daily technical analysis, let's analyze more in detail what happened at the end of the week, because on the 1-minute chart, we can certainly see what happened during Thursdays. This was the Thursday recovery with that big trade that I got up down here, going into earnings, into the close, big earnings from Apple. And then on Friday, I was watching certainly this, obviously when we have a gap, we have opportunities, but we have to also manage our risk. So this is Thursday's pivot, and this is earnings, Apple earnings, 15-minute fair value gap. So I got, this is an order block, a breaker if you want, and I got this zone as support. And also, if we take a 50 retracement from this up to the down of the Thursdays, we have our 50% retracement here on this order block. So I had this one zone and this second zone, but as you can see, I never got the opportunity to buy down here nor down here. So pretty lame, pretty bummer, but it was certainly bullish because we were holding into the numbers this fair value gap on the 15-minute, and then we just exploded to the upside. If we go down to the 1-minute chart, we can see that as soon as I saw the numbers, I just put an order here and I got a trade, a big momentum trade of more than 150 points on the big push. The only bad thing about this is that I had a couple of targets of buy-side liquidity from this zone, everything was here. So all this liquidity was taken before the open. And what happens when we take all this liquidity before the market open? We just chop. And that's exactly what we did. We just chop inside the brown area that is the fair value gap on the 30-minute. Let me just show you. On the 30-minute and the 15-minute, we have this inverse, and we are in the middle. Then we have this orange line. This is the VWAP on the daily that we talk about. And look at the yellow line. The yellow line is just a pivot, previous support. It's now, for now, resistance. So a couple of concerning points down here, but certainly momentum into the Friday and Thursday. So with that in mind, with everything that we have assessed, let's see how the rest of the big tech performs. Apple is an outlier with 6% increase. So certainly Apple it's out of the weakness. With these numbers and this dividend, they are just pushing dividends. It's not good earnings because on iPad, actually, if we check the 1 minute chart, we can see that it wasn't a big earnings push on the market open. The big push was in the overnight due to shareholders buyback. So don't get me wrong, Apple did push a lot, but iPad, iPhone, and other products revenue is not what people were expecting, at least from the consumer side. So we have this huge gap, and for now we just have to see it. This was support, this was resistance. Let's see how Apple develops down here at 180, a pretty key zone for Apple. Microsoft, big push. We are still in the middle of this range, in which I think if this goes up is strength, if this goes down is weakness. We are chopping around in the middle right now in the upper zone. So this is an uptick, but let's see. I want to see this. Tesla, well, it had a pretty volatile and choppy week. We're just going down into the gap and bouncing a bit. I would like to see more on this because this was the gap and we are in the upper part, but we touch down here. So let's see what Tesla says. Elon Musk is trying to pump the stock, but I don't think fundamentally anything. Amazon, a pretty big day. We can just remove that. We are pointing towards all-time highs. So pretty strong. I think Amazon is going to push all-time highs. We had pretty bad days here, but then big squeeze and with good earnings, I think all-time highs is going to happen sooner or later. Google, buyers coming in, but a big pullback. Let's see if we start to see these levels and also the previous all-time highs on the orange dashed line, and we can recap a little bit more of strength. Nvidia got a little bit of 2 days of bad performance due to AMD earnings. If we check AMD, it was certainly a big miss on AMD, but semiconductors are still in good shape. We are back into this. Certainly, I think there's a big opportunity tap here. If we start seeing creeping higher, this is quite a lot of strength. Semiconductors gapped up, and with Nvidia also gapping up and coming into this breakout, I mean, semiconductors are quite hot again and above the two moving average, the 20 and the 45 EMA. So finally, Meta, we are in the gap down due to earnings. We are now recouping a bit. So let's adjust this gap. As you can see, it's a pretty key zone. So we are down here. Let's see if we creep up or we reject the gap. So the big tech performed pretty good at the end of the week, but remember that analysis. We are in a mixed zone. I can see I'm bullish for next week due to the momentum, but I need to see this fair value gap to be cleared completely and start moving towards this big area of volume. In terms of dollar got a pretty damn harsh end of the week due to obviously dollar weakening because of fundamental reasons and also good economic data. So buyers stepped in and we are holding this key zone. So it's time when we are in the middle of the 20 and the 45 in this zone, it's we need to see if we go up and bounce or we continue with our weakness. Watch dollar, pretty important for next week, because at the same time we are seeing also the 2-year yield really being annihilated. But again, look at this zone. We are seeing buyers recommitting. Look at this week. And also bouncing and closing above this zone. So the 2-year yield sold off. Don't get me wrong. I agree with that. But at the end of the week, these kind of moves are a little tricky. And we saw that on the 2-year yield and also on the 10-year yield. And I incorporated a couple of more interest rate futures. This is for June, this is July, this is September with a little bit more of a drop, but still 5.18. And the big hit was on the November one. Is this November X? Let me check. This is November. So we have November here, the X at 5%. That's an interest, this is an interest rate cut. Sorry, 25 basis points. So we are seeing yields on the long term coming down, and this is good news. That's why we are seeing the yields coming down and interest rates coming down and dollar coming down, weakening. Small caps, really big push. Let's adjust basically everything, all the gap. And we left also behind another gap. So let's also put that in here. We are leaving gaps. This is always good. But small caps are really suffering. And every time we check small caps, we have to really see the breadth. And breadth on the equal weighted ETF, RSP, it was improved a little bit. We can see that we are trapped in after the big bounce on the 50%, sorry, on the golden pocket down here. That was a pretty damn good bounce. We push higher low, and then we are knocking on the door of this previous zone on the RSP. So we are quite bullish on the index, on the ETF, sorry, but the breadth, remember, this is the stocks that are above the 200, this is the 50, and this is the 20. Where are we? We are coming in both in a divergence. So higher, pushing higher on the ETF and moving lower on the percentage of index was certainly concerning. But look at this momentum. Momentum on the 20, the stocks above the 20 are 60% right now, and above the 50 are 47. So these two are one of the most important moving averages of all on the daily. So the long-term trend is established by the 200. So that's why we are still at 58%. But all these three readings are big bullish momentum pressure into a breakout. So the breadth is increasing, it's improving. Tech has good earnings. We received on Thursday, on Friday, good fundamentals. And I think that's my summary would be that way. We are in a key spot after bouncing pretty damn high from a low volume area. We are now approaching the point of control on the daily, in which we have a big volume node, but we are in the middle of the resistance on the inverse fair value gap, on the previous pivot that we established here, and also the fib retracement for the golden pocket. So we are not out of the woods. Let's go to the 4-hour to really see more clearly the amount of work that we have to do. This was a big fair value gap. So certainly we have to apply patience, but where will be the opportunities? Well, My main target is bounce of 17,900 something. We have to hold 18,000, but I'm looking towards this kind of move and targeting the big volume node and going through the inverse fair value gap. Anything different from this on Monday and Tuesday, I will change to bearish and try to manage my risk more aggressive way. There's also a 4-hour gap down here with a lot of volume. So we should certainly allow the market to go down and then push higher. We need buyers, we need areas of support to hold in this key area. And that's my main concern, my main plan, and my main expectation. If market does not do that, I will not trade. If market does not provide you with expectations and meets your plan, your levels, and your strategy, you should not trade this market, because this market is quite volatile. It's moving a lot in both directions. And we have to analyze everything in conjunction to see really the sentiment overall. Overall, open interest is increasing. Overall, money inflows. We are coming from low volume on the support, and we cleared that zone. We are now at a point in which sellers need to take control. If they don't do that, buyers will pile in. And that will be your best opportunity next week. Identify when the buyers recommit again, when sellers just gone, and you can take big trades for, I think, 300 points on Monday, Tuesday, Wednesday. That's my expectations. Next week, I'm bullish, but that doesn't mean that I'm not going to be patient or disciplined. Patience and discipline are your best tools to trade this market. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this weekly recap on Saturdays to recoup the week and to provide you with a lot of information. So if you stayed with me, thank you for that. These videos take a lot of effort. I'm doing this for me, but also publicly for you to learn from experienced traders, and also to be aware of other markets and other kind of strategies in divergences and convergences to really trade the equities. So thank you all again. Remember that discipline and patience and risk management are key for your success. Stay safe, everyone. Have a nice weekend, and see you on Monday.